Is the Australian dollar about to take a nosedive? The markets are buzzing with speculation about potential interest rate cuts by the Reserve Bank of Australia, RBA, and this pressure is definitely being felt by the Aussie dollar, AUD. Let's break down what's happening and why it matters. The Aussie dollar's balancing act. Recently, the Australian dollar has been trying to hold its ground against the US dollar, USD. This comes after the release of the preliminary S&P Global Purchasing Managers Index, PMI. All eyes are now on Australia's upcoming quarterly inflation data next week. This data is crucial because it could significantly influence the RBA's future policy decisions. You can track these forecasts in real time. https://www.fxstreet.com/rates-charts/forecast. Decoding the PMI numbers. So, what did the PMI numbers actually tell us? Australia's preliminary S&P Global Manufacturing PMI dipped to 49.7 in October, a decrease from 51.4 in the previous month. This indicates a contraction in the manufacturing sector. However, it's not all bad news. The services PMI showed an increase, rising to 53.1 in October from 52.4. The composite PMI, which combines both manufacturing and services, also saw a slight increase to 52.6 in October from 52.4. But here's where it gets controversial. While the overall composite PMI suggests continued expansion, the manufacturing contraction is a warning sign that the Australian economy might be facing headwinds. Is this a temporary blip, or the start of a more significant slowdown? What do you think? RBA's modernization plans. RBA Governor Michelle Bullock recently spoke in Sydney, but surprisingly, she didn't touch on monetary policy or the current economic climate. Instead, she mentioned that the central bank is exploring ways to modernize the interbank settlement system starting next year. This system handles a staggering 300 billion Australian dollars, approximately 194.94 billion US dollars, in daily transactions and is a vital component of Australia's payment infrastructure, according to Reuters. This upgrade aims to improve efficiency and security in the financial system. Rate cut bets, the real downward pressure. The biggest challenge for the AUD right now is the growing expectation of a near-term interest rate cut by the RBA. Australia's latest employment report threw everyone for a loop. The unemployment rate unexpectedly jumped to its highest level in nearly 4 years this September. And this is the part most people miss. This surprise increase in unemployment has led markets to dramatically increase the probability of a 25 basis point rate cut to 74%, a significant jump from around 50% just 2 weeks prior. Why is this important? Because lower interest rates generally make a currency less attractive to foreign investors, potentially weakening the AUD. Global factors at play: China and trade. The global economic landscape also plays a crucial role. The White House has confirmed that President Donald Trump will be meeting with Chinese leader Xi Jinping next week, coinciding with another round of high-level trade talks during the ASEAN summit this weekend. Given the close trade relationship between China and Australia, any changes in China's economic situation could directly impact the Australian dollar. For example, a slowdown in China's growth could reduce demand for Australian exports, putting downward pressure on the AUD. Meanwhile, across the Pacific, the US dollar's strength. While the AUD faces its own set of challenges, the US dollar, USD, is currently gaining strength as traders await key US inflation data. Let's take a look at what's influencing the greenback. US dollar index, DXY. The DXY, which measures the USD's value against 6 major currencies, is trading around 99.00 at the time of this writing. Traders are exercising caution ahead of the release of September's US inflation data due on Friday, especially given the ongoing government shutdown and the resulting data blackout. Trump-Xi meeting. The USD received a boost after President Trump stated he expects to reach several agreements with Chinese President Xi Jinping during their meeting in South Korea next week. Discussions are expected to cover various topics, including U.S. soybean exports, limiting nuclear weapons, and China's purchases of Russian oil. Positive outcomes from these talks could further strengthen the USD. U.S. government shutdown. The prolonged U.S. government shutdown is causing concern, as it delays the release of key economic data, including non-farm payrolls, NFP. This creates uncertainty for financial markets and the Federal Reserve, Fed. Fed rate cut expectations. A recent Reuters poll indicated that the majority of economists anticipate the Fed to reduce interest rates by 25 basis points, BPS, to 3.75% to 4.00% in their monetary policy announcement on October 29. The CME FedWatch tool suggests markets are pricing in a high probability of a Fed rate cut in October and another in December. However, these expectations could shift depending on the upcoming inflation data. China's loan prime rates. The People's Bank of China, PBOC, recently decided to keep its 1- and 5-year loan prime rates, LPRs, unchanged. Critical Minerals Agreement. President Trump and Australian Prime Minister Anthony Albanese signed a $8.5 billion critical minerals agreement, aiming to secure access to Australia's rare earth resources amid China's tighter export controls. This agreement could have long-term implications for both countries. Technical analysis. What the charts say. Currently, Australian dollar to US dollar is trading around 0.6510. Technical analysis suggests a persistent bearish bias, with the pair trading within a descending channel. The 14-day Relative Strength Index, RSI, remains below 50, further supporting the bearish outlook. Downside risks. The Australian dollar to US dollar pair might test the area around the 4-month low of 0.6414, followed by the lower boundary of the descending channel around 0.6390. A break below this support zone could lead to a test of the 5-month low of 0.6372. Upside potential. The Australian dollar to US dollar pair is hovering around the 9-day exponential moving average, EMA, at 0.6508. A break above this level could improve short-term price momentum and support a test of the 50-day EMA at 0.6541, which aligns with the descending channel's upper boundary. Australian dollar price movements today. The table provided illustrates the percentage change of the Australian dollar, AUD, against other major currencies today. Notably, the Australian dollar was weakest against the US dollar. The heat map visually represents these percentage changes, allowing for easy comparison of currency performance. RBA, frequently asked questions. Let's address some common questions about the Reserve Bank of Australia, RBA. What does the RBA do? The RBA sets interest rates and manages monetary policy for Australia. Its primary goal is to maintain price stability, an inflation rate of 2 to 3%, while also contributing to currency stability, full employment, and economic prosperity. How does the RBA influence the AUD? The RBA's main tool is raising or lowering interest rates. Higher interest rates tend to strengthen the AUD, while lower rates can weaken it. The RBA also uses tools like quantitative easing and tightening. How does inflation affect the AUD? Moderately higher inflation can lead to central banks raising interest rates, attracting capital inflows and increasing demand for the local currency. How does macroeconomic data impact the AUD? Strong economic data can encourage the RBA to raise interest rates, supporting the AUD. Key indicators include GDP, manufacturing and services PMIs, employment data, and consumer sentiment surveys. What is quantitative easing, QE? QE involves the RBA printing Australian dollars to buy assets, providing liquidity to financial institutions. QE typically weakens the AUD. What is